Are you a business owner that has accidentally combined your personal and your business expenses? Today, I'm going to go over a couple of slides on why you should try your best to organize the two, and it will make your life a lot easier in the future. And you can use all these slides and see them on the U.S. Small Business Administration website. So the first lesson goes over the idea that you're going to have personal and business expenses. So it's very important for you to separate and make sure you do a good job on marking it down for the future. This slide goes over the types of deductions that are available. And as you can see, if you have a remote business, there are some things you can deduct. Whereas if you're using your vehicle for the business, there is a portion of your mileage that you can deduct. Same thing for phones. This goes over the details on all your income that comes in. And this is a big key point of this slide is the do's and don'ts of investing your money in your business. And it kind of goes over the fact that you want to make sure that you know where your finances are when it comes to paying and financial statements. And a big key moment here is this fact right here, that 45% of small businesses use personal credit cards. And I'm sure you can think of ways that this could complicate your taxes and stuff like that. And so it's very important so that we have an idea of what our credit is and make sure that we know what we're doing with our credit cards and our expenses. And the key takeaway of this slide is take care of your own finances by budgeting, managing your debts and your bills, and maintain a strong credit. At the same time, be mindful of the important boundary between personal and business finances. That's basically saying be aware of how you're going about your expenses and your reports of your business because you do not want them intermingling with your personal records. The second portion of this lesson talks about debt management and being able to leverage your assets. First step is going over the two types of debts. There's business debt and then there's household debt. Business debt is the money that your business owes other businesses or individuals. And then you have household debt, which is the combined money owned by all the people in the household. A couple of examples are home mortgages, car loans, credit cards. So it's very important to see where you stand here and see how you can analyze and go about it. What I like is it gives you a plan here, step by step, of suggestions. The first one is they suggest creating a budget, and it is helpful to take the time, analyze your situation, see where you can go about it, where you can invest a little bit more, where you cut back on a couple of expenses. All depends. The second step is eliminate debt where you can. Kind of ties into the first step. See where you can cut up on your expenses. See if you can pay a little bit more. The third step is a great step. I've never tried it myself. I might have to in the future. Is call your creditors, see and negotiate if they can lower your rate. And as it mentions here, even 1 or 2% can save you a lot of money. Next step is pay more than the minimum. This is a great classic strategy. A lot of people don't know that you can pay more than what your app says, where the automatic payment is. It's always important to see if you have some extra cash. You can pay a little bit more. All depends on your situation. And then this next step with the friends and family, they suggest if you have any friends or family that will lend you money, see if that's a good option for you. And the last is seek assistance. There's local banks and credit unions that have resources depending on your situation. And they also suggest visiting the National Foundation of Credit Counseling and Financial Counseling Association of America. And so where they mention here is not all debt is the same. There are different payments, different plans, depending on what your situation is. There are great resources to be had. The second portion of this lesson talks about leveraging your finances for your business. And it basically discusses all the things that you can use as collateral, see what can be in your benefit. And so the first step is here, the lower risk. Many entrepreneurs use their personal vehicle for business. I know I use mine. Got to always see what kind of deductions you can do when it comes to that. And so suggest, knowing how to go about it, how to deduct your expenses. Moderate risk. They say there's different types of loans for that. And higher risk. Loans against your home are higher risk. Why? Because the asset that could be lost is your home. Of course, you want to be very careful before you do any of this. Consult with someone because I'm not an accountant. I'm just someone that's trying to learn as I go. And I will be getting an accountant. And then right here basically talks if you're a small business owner, you know the importance of being able to make it into a corporation so you can protect your personal assets and know what you're getting into. And the key takeaway here is effectively manage your business and finances in business will not only provide you with an alternative method to raise capital for your business, but will also give you peace of mind. So it is very important you go over these steps, know what you're getting into.